Hello, my dear friends and students. Welcome you one and all. I am Talamburajan, postgraduate economics teacher, Municipal Higher Secondary School, Puduramakrishnapuram, Tirupur, Tamil Nadu. Okay, come to the point. In modern days, it is not safe to keep the valuable items at the home. So, we are in need to safeguard our valuable things in a protected place. I think you know about the place what I am going to locate for you. Yes, of course, it's a bank. The bank is not only keeping an valuable things but also doing many other functions for the society. Now, let us see the topic banking in chapter 6 of Higher Secondary second year. Banking is a dynamic concept for each and everyone's life. Finance is lifeblood of all economic activities such as trade, commerce, agriculture, and industry. Likewise, a bank is generally understood as an institution which provides fundamental financial services such as accepting deposits and lending loans. Due to the importance in the financial stability of a country, banks are highly regulated in most countries. Here is the quotation for banking given by the famous economist Colbertson. Commercial banks are the institutions that make short-term loans to business and in the process create money. At the time of completion of this chapter, you must understand the following objectives about the banking. Now, let me see the learning objectives of this chapter. First objective is to know about the functions of central bank and commercial banks. Then second one is to understand the non-banking financial institutions and their functions. Let me explain about the historical development of banks. The oldest central bank in the world in 1656 is the Riksbanks of Sweden. And a large number of central banks were established between 1921 and 1954. In the year 1921, the South African Reserve Bank was established. Consequently, 1928, the Central Bank of China, 1934, the Reserve Bank of New Zealand, and in our country, in 1935, the Reserve Bank of India was established. In 1950, Central Bank of Ceylon and 1954, Bank of Israel were established. It's my duty to explain about the history of Indian banks for you. Now, the first bank of India was Bank of Hindustan in the year 1770, which was under the British rule. The banking system in India was controlled and dominated by the presidency banks. There were three presidency banks. What are they? Bank of Bengal in 1899, Bank of Bombay in 1840, Bank of Madras in 1843. These all banks are merged in 1921 and which was known as Imperial Bank of India. The Imperial Bank of India was changed in the year 1955 to State Bank of India. Functions of commercial banks. Before we enter into its topic, let you know about what is commercial banks. See, commercial bank refers to a bank or a division of a large bank which more specifically deals with deposit and loan services provided to corporations or large or middle-sized business as opposed to individual members of the public or small business. See, here there are three functions. First one, primary function. Second one, secondary function. Third one, other functions. See, under the primary function, we are going to see about accepting deposits, advancing loans, and under the secondary functions, agency services, general utility services, transfer of funds, and credit creations. Primary functions. Let me know about accepting deposits. Commercial banks are mainly dependent on public deposits. It accepts the deposits of the public. There are two types of deposits. The first one is demand deposit. It refers to the deposits that can be withdrawn by individuals without any prior notice to the bank. Then the second one is time deposits. It refers to deposits that are made for certain committed period of time. Banks pay higher interest on time deposits. The second one is advancing loans. Banks granting loans to individuals and businesses like housing loan and industrial loans. And next part, that is secondary functions. The first point in secondary function is agency function. It implies that commercial banks act as agents of customers by performing various functions. Under the various functions, the first one is collecting checks. Banks collect checks and bills of exchange on the behalf of their customers through clearinghouse facilities provided by the central bank. Next one is collecting income. Commercial banks collect dividends, pension, salaries, rent, and interest on investment on behalf of their customers. The third one is paying expenses. Commercial banks make the payments of various obligations of customers such as telephone bills, insurance premium, school fees, and rents. Similar to credit voucher, a debit voucher is sent to the customers for information when expenses are paid by the bank. See, these are the primary and secondary functions. Under the secondary functions, the second one is general utility function. The general utility functions are providing locker facilities. See, commercial banks provide locker facilities to its customers for safe custody of jewelry, shares, debentures, and other valuable items. Next one is issuing traveler's check. This is very important for you. It may come under 2 mark question. And then banks issue traveler checks to individuals for traveling outside the country. If you are going for outside countries, you can get the traveler checks from concerned agencies. Traveler checks are the safe and easy way to protect money while traveling. And next one is dealing in foreign exchange. Commercial banks helps in providing foreign exchange to businessmen dealing in exports and imports. Then under the secondary function, third one is transferring funds. It refers to transferring of funds from one bank to another. Funds are transferred by means of draft, telephonic transfer, and electronic transfer, that is e-transfer. And fourth one is letter of credit. Commercial banks issue letters of credit to their customers to certify their credit worthiness. And under the underwriting securities, commercial banks also undertake the task of underwriting securities. And second one is electronic function banking. It includes services such as debit cards, credit cards, and internet banking. Nowadays, these are all possible in each and everyone's hand. And third one is other function. So under the other function, money supply, it refers to one of the important functions of the commercial banks that helps in increasing money supply. And next one is credit creation. See, credit creation means multiplication of loans and advances. Commercial bank receive deposits from public and use these deposits to give loans. And third one is collecting statistics. So banks collect and publish statistics relating to trade, commerce, and industry. Hence, they advise customers and the public authorities on financial matters. See, this is a 5-mark question for you, and study well. One question on before you, then what are the techniques of credit creation by the commercial banks? See, in modern days, banks create deposits in 2 ways. They are primary deposit and derived deposits. When a customer gives cash to the bank and the bank creates a book debt in his name called a deposit. It is known as a primary deposit. But when such a deposit is created without there being any prior payment of equivalent cash to the bank, it is called as derivative deposit. Here, banks have the power to expand contract demand deposits, and they exercise this power through granting more or less loans and advances and acquiring other assets. This power of commercial bank to create deposits through expanding their loans and advances is known as credit creation. Commercial banks plays a vital role in the economic development of a country. Let us see what are the role played by the commercial banks for the development of a country. First one, capital formation. Second one, creation of credit. Third one, channelizing the funds. Fourth one, encouraging rights type of industries. Fifth one, banks monetize debt. Sixth one, finance to government. Seventh one, employment generation. And eighth one, bank promote entrepreneurship. The first role of the commercial bank in economic development of a country is capital formation. Banks play an important role in capital formation, which is essential for the economic development of a country. They mobilize the small savings of the people scattered over a wide area through their network of branches all over the country and make it available for productive purposes. Nowadays, all the banks offer very attractive schemes to induce the people to save their money with them and bring the saving mobilized to the organized money market. And second one, credit creation, creation of credit. Banks create credit for the purpose of providing more funds for development projects. Credit creation lead to increased production, employment, sales and prices, and thereby they bring about faster economic development also. Third role is channelizing the funds towards productive investments. So banks invest the savings mobilized by them for productive process. Capital formation is not the only function of commercial banks. Pooled savings should be allocated to various sectors of the economy with a view to increase the productivity. Then fourth one is encouraging right type of industries. See, many banks help the development of the right type of industry by extending loan to higher type of persons or right type of person. In this way, they help not only for industrialization of the country but also for economic development of a country. They grant loans and advances to manufacturers whose products are in great demand. The manufacturers in turn increase their products by introducing new methods of production and assist in raising the national income of the country. Fifth role is bank monetize debt. Commercial banks transform the loan to be repaid after a certain period into cash, which can be immediately used for business activities. Manufacturers and the wholesale traders cannot increase their sales without selling goods on credit basis. But credit sales may lead to locking up of capital. And sixth one is finance to government. Government is acting as a promoter of industries underdeveloped countries for which finance is needed for it. Banks provide long-term credit to the government by investing their funds in government securities and short-term finance by purchasing treasury bills. Seventh role is employment generation. After the nationalization of big banks, banking industry has grown to a great extent. Banks branches are opened frequently, which leads to the creation of new employment opportunities for the society. And eighth one is bank promote entrepreneurship. In recent days, banks have assumed the role of developing entrepreneurship, particularly in developing countries like India, by including new entrepreneurship to take up the well-formulated projects and provision of counseling services like technical and managerial guidance. A non-banking financial institution or non-bank financial company is a financial institution that does not have a full banking license or is not supervised by the central bank. Here, they do not carry on pure banking business, but they will carry on financial transaction. They are institutions which undertake borrowing and lending. They operate in both the money and the capital markets. For example, for these non-financial companies are issue houses, investment trusts, and unit trusts, and insurance companies. Look at the picture also. Now, it's a time to recall what we learned before. Under the banking chapter, we learned about the historical development of banking and the history of Indian banks. What is the meaning of commercial banks and what are the main functions of commercial banks? The mechanism of credit creation by commercial banks, the role of commercial banks in economic development of a country, and finally, the study about a non-banking financial institutions. Chapter 6, Banking Part 1 completed here. Thanks for watching and hope you can get clear idea about the commercial banks and their functions. Let you wait up to the next part. Till then, thank you.